the reality is it may be more challenging to buy assets in certain parts of the market cycle. You really need to learn what your buy right criteria is. You really need to figure out what that is. The first thing that I see why people are not closing deals in this part of the market cycle. Hello and welcome. My name is Gino Barbaro, one of the co-founders of Jake and Gino. And in this how-to video, we're going to be discussing why you are not closing deals in this part of the market cycle. Before we jump in and get started, please do me a big favor. Hit me a big like, subscribe to the channel so we can continue to grow this channel. If you do that, it helps us out tremendously. We get the message out because what we're trying to create here with Jake and Gino, we're trying to really build a community of multifamily investors to get out there and to learn how to buy right, manage right, finance right. So like, subscribe to the channel. Let's jump in. Because to me, I've been struggling for the last 10 years or so coaching students on buying multifamily. There are some students who are doing amazing jobs who have no business getting into multifamily and doing great. You know the ones. They have no money, they have no experience, and yet they close deals. And then you have those who have the talent, the skills, the background, the balance sheet. They've got it all, and yet they're scratching their heads and they're not closing deals. And talking from personal experience, I went through the same thing. Now, we've been able to help, over 150 students leave their W-2 jobs. The student base is closed probably now in excess of over 90,000 units. They've been able to raise over $700 million. So to me, these aren't guesses, things I'm going to share with you right now. These are just observations that I've made over the past decade or so, coaching individuals to buy multifamily. And on top of that, my 20 plus years of experience of doing it, making a ton of mistakes, what I like to say, life before Jake and then life after Jake. So the first thing that I see why people are not closing deals in this part of the market cycle, we can expand and say in any part of the market cycle, they have no map, they have no process, they have no focus. They come in and they say to themselves, I want a deal. Great. Well, what does a deal look like? And I made the same very big mistake back in '05. When I decided to get into real estate, I had a little pile of money here and I'm like, ooh, real estate. I just got to diversify. I need to get a return. Well, let me go out and find a deal. Didn't know what a deal was, didn't know what a cap rate was, didn't know what anything was. Didn't have a map or a process. I obviously did not have buy right, manage right, finance right. Gave my money over to a guy, which is what I like to say. I gave my money over. I really didn't have the stewardship of that money. And within 18 months, the money was gone. And there are so many lessons to that. Go back into the how-tos. You can see all the mistakes that I've made. But really, it comes down to me of not having a map or a process. And when Jake and I got started, we started teaching the buy right, the manage right, the finance right. And that's really important. That's the foundation. If you don't have a foundation to buy your assets, if you don't have a strategy or a framework, I'm sure there are other frameworks or strategies out there. But for us, it's all encompassing. You really need to learn what your buy right criteria is. You really need to figure out what that is. When I was buying a deal, I didn't have a criteria. I was just looking at a specific asset class. Well, drill down into your specific buy with a specific asset type. And then you get into the market, you get into the details of the assets, the returns. You need the buy right. The finance right is so important because people were closing deals over the last 3 or 4 years with this short-term bridge debt. They were closing deals, now they're losing deals. You need to understand that. And the manage right is the important part, which is the wheel of what we call the wheelbarrow, the third pillar of the framework. That's in constant motion. Now, you may not need that to close a deal, although I think you do, because managing an asset, whether it's asset management and or property management, allows you to understand how to value the asset, makes you understand, become a better underwriter, and to spot value quicker. Although you may be paying more on the front end, somebody may be thinking you are. Well, on the back end, you know that you can cut expenses and you can increase income. So putting all three of those together is going to give you a higher rate of success to close deals. Now, for me, encompassing all of that, not having the strategy, not having the focus, was my limiting beliefs. And that's the one thing that I see with a lot of newer investors. They don't think they can. They don't start identifying as a multifamily investor or as just an investor or as a business owner, which is what you ultimately become. That's why, over the last several months, I really pivoted into money coaching. And money coaching is amazing. It's a language-based methodology. It really makes you go back, explore your childhood, explore the patterns that you've created around money. You hear a lot of people say money doesn't grow on trees. I can't afford that. It takes money to make money. These are all beliefs that I had. So you couple that, all those limiting beliefs, along without having a process, you're setting yourself up for failure. Now, if you want more information on how to explore those patterns, those beliefs, what's holding you back, and you want to talk about money coaching, just email me, Gino at jakeandgino.com. Say, hey, Gino, I want to learn more about money coaching. Or more importantly, just go to barbaro360.com, BARBARO 360.com, and schedule a strategy session with us. Because once you start looking and shining a light on those beliefs that are holding you back, once I understood, hey, it doesn't take money to make money. Well, it does, but it doesn't take my money. I learned all about seller financing. And then I learned what syndications were. And then I learned how to partner. I just removed the complete barrier. What was holding me back? Those patterns, those beliefs. Once I started exploring that, things completely changed for me. So that's the first one, everybody. No framework, no map, no process. Couple that with beliefs that are holding you back. The second one, and I know a lot of you out there are guilty of this. It's the I'm a person. I'ma do this, I'ma do that. I'ma does everything, and I'ma is gonna get burned out. It's really interesting that for myself, for over 20 years, I owned one restaurant. That's it. I was doing everything in that restaurant. My brother was my partner. I was in the kitchen. I was washing dishes. I was sweeping the floors. I was taking out the garbage. I was doing the menus. I was doing everything. I had no systems. I couldn't scale. I was literally getting burned out. I was the mom and pop restaurant owner. Once I started buying assets with Jake, my mind completely shifted. I got out of one scenario over to the next scenario. And then all of a sudden, I decided I needed another partner. I met Jake. We became really good friends. We became really good business partners. He had certain skills. I had certain skills. I didn't have to do it all by myself. We bought our first couple of deals. I was still falling into that trap, doing those things, cutting the grass. We started doing some turns. And then all of a sudden, we bought a couple more deals. We had scale. And then all of a sudden, we were able to hire managers, maintenance techs. But if you're out there and you're trying to do this business all by yourself, you are going to get burned out. It's hard to look for deals and underwrite deals. It's hard to make connections with brokers. It's hard to raise capital. It's hard to build the brand to be able to, get that capital, to be able to go out there and say, hey, by the way, attracting that capital, you got to do that. It's hard to asset manage and property manage. If you're doing that all by yourself, where do you find the time to do all of that? For me, my breakthrough was finding an amazing partner and ultimately delegating different responsibilities. And on top of that, I saw with the Jake and Gino community and the Wheelbarrow Profits community, once you join a community, it's not just the education and the videos, it's the accountability that you get. If you have KPIs and your KPIs, your key performance indicators are, yes, I need to call 2 brokers a week. I need to underwrite 1 deal a week. And I need to speak to 3 investors a week. If you're all by yourself, you may let that slip. But if you've got a business partner and or a community and you're on weekly calls, I would say you're more likely to do that. You're not going to let them down. You may let yourself down, but you're not going to let them down. So the second one is I'm going to do this, I'm going to do that. You need to go out and find, whether it's collaborative relationships, whether it is business relationships, whether it's a community, you need to be able to find the tribe or community to join, to be a part of, to help you to scale this business. Now, This one may be a little obvious, it may not. It's been challenging. In 21 and 22, Jake and I, we really didn't do that many deals. We bought a 12 unit in 21, a 16 unit, and a 25 unit. In 2022, we bought a couple of other small deals. We bought a 6 unit, we bought a 12 unit, a couple of small deals. In 2023, the dam for us burst. We did 300 units in 2023. Last year in 24, we did almost 200 units. This year, we've done 62 units. We've got about maybe $14 million in assets that we've purchased this year. Now, the reality is it may be more challenging to buy assets in certain parts of the market cycle. When there's all of this capital coming into the market, when cap rates are low, but interest rates are also really low, when debt is cheap, the cost of capital is cheap, asset prices are going to rise. It's going to be more challenging. And I'll leave you with this. No deal is better than a bad deal. Maybe it's not the right time to buy an asset. You may be saying to yourself, but I need to do something in this business. Now, maybe the time, or if the time passed, or if you get back into this type of the market cycle where you think assets are overpriced, maybe now's the time to work and to try to attract investors. Maybe it's now's the time to create more systems. I know in those 2 years, we really buckled down and worked on our property management systems. We worked on budgeting. We worked on customer experiences and customer journeys. We had a ton of CapEx projects that we needed to have done completed. So there are things that you can do in this business if you are not able to close on deals. You're able to really systematize your business. And on top of that, you're also able to systematize or work on content to be able to attract investors. So the next one, it may not be the time to buy these assets, right? That's important. And this last one, I sort of mentioned it a little bit, but it really comes down, at least in my opinion, because I've been through this, your relationship with money. And I was really challenged early on when I was by myself. I had a good experience in my very first deal over 20 years ago. It was a small deal, but I bought it right. I made some money. My next 3 or 4 deals were super challenging. And then all of a sudden, I had all of these beliefs about money. Am I good enough? Am I smart enough? Do I deserve it? Am I worthy? And it was really challenging for me until '08 came and I said, I got to stop this nonsense. The market doesn't care how I feel. The market cares how good I am and how much value I can bring and how I understand this business. And I did have a poor relationship with money. In money coaching, there's something we call archetypes. They're really characters within you that dictate how you act and behave with money. Well, one of the 8 archetypes is what they call the tyrant. I was tyrannical. I was fearful of money. I was aggressive. I had the scarcity mindset. Do you think you're going to do a lot of deals when you earn that mindset, when you're scarce and you're fearful? Well, that's what I had. And when I met Jake and I started going through trainings and I joined a mentorship program and I understood, everything changed for me. All of a sudden, I saw the positive. All of a sudden, I looked at deals in a different light. And for me, part of this is your relationship with money, but I'll also put this fourth reason, and I'll also couple it with having a long-term mindset. In multifamily, it's not get rich quick. You may be wanting to get into a deal and 6 months later, you may want to exit. That's pretty rare. A typical hold is 3 to 5 years. When the market's really hot, you can actually get in a deal within 18 months, you can flip it out. But when musical chairs stop, guess what? You're going to be holding on to that asset. And that's where we are right now. It's like a 7-year hold. So what I want you to do as you're listening to this, I want you to challenge your relationship with money. Go back when you were a child. What does your money bio look like? Do you have money traumas? And that sounds like an interesting and a weird thing to say, a money trauma. I mean, basically, money trauma is anything that you heard that really skewed or really left an indelible mark with you on money. For me, when I was a little kid, I went to the grocery store with my grandmother. I was 5 years old. We couldn't afford something. And I remember leaving there crushed, saying, we don't have the money. We're poor. I don't even remember. My grandmother said that when your mom comes home, we'll go back and we'll buy it. I don't even remember if we did. All I remember is if I don't get something now, it's lost forever. And my other money traumas, which I don't think was a trauma, but we were immigrants. We saved, always for a rainy day, always for the negative, never for the positive. Don't get ahead of your skis. You have to stay small, be fearful, scarcity. Well, it's pretty hard to buy a multifamily and take risk when you have a lot of those blocks and a lot of those limiting beliefs. And I see a lot of members in our community, they have those beliefs. They may have all of the tools, they may have all of the skills, but what I've noticed, and I think Tony Robbins has said this, it's 20% mechanical, 80% of it is psychological. And if you can work on that aspect and you can work on your relationship with money and you can heal that relationship with money, all of a sudden you learn how to do it. You put the skills and you put your mindset together. I guarantee you within the next year, you'll be closing your next deal. So let me recap this really quick before I let you guys go. Number one, no market, no process, no map, no strategy. Number two, the I'm a guy. I'm going to do this, I'm going to do that. Number three, it may not just be the market cycle right now that you're in, that you're buying a deal, and that's okay. No deal is better than a bad deal. And number four, your relationship with money. Now, once again, if you want to learn more about money coaching, just go to barbaro360.com, hit me up. I'd love to learn more about what beliefs are holding you back, because once you break that dam, the sky's the limit. We went from 0 units to 1,500 units in 5 years. Once I removed those limiting beliefs and I knew that I was worthy and I had a process and a system behind me, the sky's the limit. I want to thank you for spending part of your day with me, and I will see you all on next week's How To. Thanks for tuning in. If you enjoyed today's video, be sure to like and subscribe so you'll never miss another episode.